This GameStop is really something we must talk about.
GameStop's stock is surging.
You have a short squeeze and it goes up, but this one keeps going.
You'll never know who Wall Street Bets will target next.
As many of you know, GameStop, or the ticker code GME, was just the first of around a dozen other stocks to rally in early January 2021. During that time, a lot of people made a lot of money, but a lot of people lost a lot of money too. So in today's video, I'm going to look at how these meme stocks have performed since the 2021 rally and how much profit you would have made if you'd invested in these stocks during the GameStop short squeeze. But first, I thought it would be valuable to take a quick snapshot of the events leading up to the 2021 rally. So in some ways, I think the whole thing started back in 2019 when GameStop was trading at near record lows. It was around this time that Keith Gill, a 34-year-old marketing professional known by the Reddit username Deep Fucking Value and the YouTube and Twitter alias Roaring Kitty, purchased around $53,000 in call options on GameStop stock and began posting about it. So it was also around this time that Michael Burry, best known for predicting the GFC, bought a 3.3% stake in GameStop. By early 2020, the conversation about GME being underpriced really started to take off, especially on one forum site known today as Wall Street Bets on Reddit. By January 2021, posts started appearing on Wall Street Bets that GameStop was primed for a short squeeze. Some of these users put up a bunch of posts about how they were buying GameStop options, and this drove the price up. The soaring price meant that some shorts had to cover, which drove the price up even further. On January 12, 2021, GameStop rose over 600% in a day. And then, of course, by late January 2021, fueled on by the huge success of GameStop, Redditors started targeting other heavily shorted stocks. By January 27, AMC and about a dozen other stocks were rallying. And by the next day, on January 28, Robinhood and other brokers halted trades on GameStop and other meme stocks. By late January, short sellers had lost billions, including Melbourne Capital, a hedge fund that reportedly lost around 50% of its market value. By February 2021, lawsuits had been filed against Robinhood and other brokers for halting trades. And it's been pretty volatile for these meme stocks since then. While retail investors are often held up as the heroes of the story, in fact, institutional investors and hedge funds actually profited significantly from this, including BlackRock, who some estimate made more than $2 billion thanks to GME holdings. Okay, so I thought it would be a good idea to look at how these stocks have performed since the peak of their rally back in January 2021, and then look at how they've performed if you'd invested in these stocks just before the rally started. But before I go on, if you like this video, please hit the like and subscribe button because it really does help me to keep creating more videos. Moving on. So I'm sort of counting December 31 as like the best case scenario you're buying into these stocks before they really took off. And I'm counting the peak of the market, whether that was in January or February, as like the worst case scenario if you bought into these stocks. Most likely you would have bought in somewhere in between. For the most part, these meme stocks have actually outperformed the market pretty significantly. The differences between the profit and loss percentages does show there's probably a little bit more room for profiting than losing out. Of course, it all depends on what stock you would have invested in, what stock you would have bought. Far and away, the two most successful stocks on this list would be GameStop and AMC. They're also the two most popular and most well-known stocks. So I think that's a kind of interesting lesson to take from all this. That in fact, being a famous, well-known stock is really good for your business. It's also worth noting that over the last few weeks, markets have been really volatile. So we're coming in and looking at these prices at a time when prices across the board are really suffering. So if you look at this chart here of all the stocks over the last 6 months, over the last 1 year, you can see that most of them have risen over the year, but they're all significantly down over the last 6 months. And of course, that all comes down to the fact that inflation is coming. Central banks around the world are suggesting that they're going to raise interest rates multiple times over the next couple of years. When that happens, investors tend to move funds out of riskier stocks. And what is a more risky stock than a meme stock, at least in the eyes of most investors? So where are they today since the GameStop short squeeze? Well, since the short squeeze, GameStop has raised $1.7 billion from new stock sales. They also generated $1.3 billion in revenue over the 3 months ending in October last year. That being said, their net loss actually increased to $105.4 million in Q3 2021, or $1.39 per share, and today it's only about 18% shorted compared to 114% shorted just a year ago. Analysts, on the other hand, are quite bearish on GameStop. So looking at NASDAQ analysts, they thought GameStop would fall to $34 this year. CNN analysts saw it fall to $45, while MarketWatch predicted a price of $56 by the end of the year. AMC has also posted a net loss, which is kind of understandable considering the lockdowns are still kind of continuing on. It posted a net loss of $224.2 million, or 44 cents per share, compared with a loss of $905.8 million, or $8.41 per share. So it's significantly decreased its net loss. Meanwhile, revenue rose to over $763 million from $119 million the year prior, and today it is only 18% shorted compared to last year. And of analyst price predictions, NASDAQ analysts said they thought it would fall to $8 by the end of the year. MarketWatch suggested $10.45, and CNN analysts expected it to fall to $6. So in other words, analysts are pretty bearish about the price of these two stocks over the next 12 months. It's also worth noting that hedge funds selling out of GameStop completely have jumped over the last quarter, with 11 hedge funds selling out of GameStop completely by Q3, as opposed to 2 that opened new positions in GameStop. So 1 year on, and arguably the most important changes haven't been to the stock prices, but to the industry itself. After brokers stopped trades of meme stocks last year, brokers and especially Robinhood were heavily criticized. By February 2021, at least 30 lawsuits had been filed against Robinhood for stopping trades, with traders claiming they lost a lot of money because of it. This led to a lot more scrutiny about how these brokers make money and whose interests they really have at heart. There was also renewed criticism over short selling and the role that it plays in the financial system, including of course by Elon Musk, who is firmly against short sellers. Mostly because a lot of short sellers shorted Tesla a while back. But I think one of the biggest changes has been the confidence that retail investors now have to manage their own investments and to make their own financial decisions. The GameStop short squeeze, whatever you may think about it, saw a lot of people sign up to share trading platforms for the first time. In fact, signups quadrupled between January and February to share trading platforms. Record numbers of people also joined investment web forums, such as Reddit's Wall Street Bets, and also Facebook groups around investment topics so that they could share ideas and ask questions. Investors are now more empowered to make big changes, to do their own trades, and to do their own research. And I think out of all this, that is a really good thing. That's it for me today. Thanks so much for watching. If you like this video, please hit the like and subscribe button. See you next time.